what's been going on despite the war, to me, is really interesting. Bessent, Powell, and banks have been having meetings and talking because there is a credit problem. There just isn't enough filthy fiat to go around in the filthy financial system to survive. So from Bloomberg, this Anthropic model scare sparks urgent Bessent Powell warning to bank CEOs. My interpretation of this headline was Bessent and Powell need to talk to CEOs of banks because the financial system is on the cusp of what could be a serious crisis. And let's not title the meeting that. Let's title it that Anthropic's model was really powerful.
Something is quietly breaking beneath the surface of the global financial system, and most people aren't paying attention. Over the past few weeks, the Federal Reserve and the U.S. Treasury have taken a step they haven't made in over a decade. They've started directly asking major banks to disclose their exposure to private credit. This is not some routine meeting between bank CEOs and regulators. It is what regulators do when they stop trusting the numbers they've been given and start preparing for stress behind the scenes. At the same time, some of the largest private credit funds in the world, firms managing tens of billions, have begun restricting withdrawals. Investors are trying to exit, and the funds simply don't have the liquidity to meet demand. Private credit has ballooned into a $2 trillion ecosystem, deeply intertwined with pension funds, insurance companies, sovereign wealth funds, and global banks. If those valuations reset, the damage doesn't stay contained. It spreads across the entire financial system. And that's exactly why figures like Treasury Secretary Scott Bessent and Fed Chair Jerome Powell are now reportedly in direct talks with bank CEOs. Officially, the headlines point to AI risks and emerging technologies. But as Jack Mallers points out, that explanation doesn't quite pass the smell test. Because when the most powerful financial authorities in the world start coordinating behind closed doors, it usually means one thing: they see something coming, and they're trying to get ahead of it. So the real question is, what happens next? Are markets correctly pricing in what's coming, or are we in that dangerous phase where everything still looks fine, right before it isn't? If you want breakdowns like this that cut through the noise and actually explain what's happening beneath the headlines, make sure you hit like, subscribe, and let me know in the comments. Do you think markets are underestimating this risk or already pricing it in? Before we get into today's breakdown, quick question. If you're holding crypto right now, what is it actually doing for you? Most people are stuck in the same loop. Buy, hold, wait. Your capital just sits there while the market moves around it. FortisX changes that. It's a staking and on-chain analytics platform that lets you put idle assets to work. It's something more people are starting to pay attention to, especially in uncertain markets like this. I've left a link in the description if you want to check it out. Thank you, and enjoy the video.
I found this really interesting. I got this from a Bloomberg article. So the oil shock in 1973, Bloomberg noted, which I found fascinating, it took a while for the markets to actually decline and appreciate what was happening. So you can see here that you have the oil shock in 73, then you've got an embargo declared, a ceasefire, and then the embargo lifted. And in the blue is the S&P 500. And it took the S&P 500 like a full 12 months to really digest just how bad it is to have, energy markets. I think oil went up 300% during the 73 shock, which is still orders of magnitude of the oil price, what it's done so far in this shock, in the 2026 shock. So the end of this is like, where are we? Because I'm looking at my chart right now. Bitcoin's back above 74,000 as I'm talking to you guys. The S&P 500 is higher now than it was before the war started. So markets are clearly excited about something, or they're trying to price in something. And to me, I just don't... I don't know if I'm sold yet. Like, is the bull market back? Are we back? Is Bitcoin going to march its way to all-time highs? They're going to give some form of liquidity. The U.S. has something on Iran that I'm not aware of, that we're all not aware of. I don't know. Or is the market it just takes the market. The market's far too optimistic, and it's going to take itself time to really unwind and get into a crisis scenario where they're going to have to print. Next section, Iran accepts Bitcoin ? So for people that didn't see this, this was in the FT. I'll read the quote. Once the email arrives and Iran completes its assessment, vessels are given a few seconds to pay in Bitcoin, ensuring they can't be traced or confiscated due to sanctions. I tweeted about this. I said, is Bitcoin actually competing to be the future world reserve currency? Yes. When you need money that nobody can debase, that is free to hold and receive, that is cheap to transfer, that is censorship resistant, and that even enemies can settle in, there is no second best. Okay. I just wanted to opine on this really quick. Now, could it be the case that Iran is trolling Trump and America by saying, because Trump supported Bitcoin and has the Bitcoin reserve, that we're not going to take your shitty dollars. Give us some of those sweet sats from your Bitcoin reserve, you loser. It could be a giant troll. Obviously, what we all want is for a ship to pass through and tweet their Bitcoin transaction on the blockchain. Like, we would all love that. Now, I have heard from sources that I consider to be immensely powerful and ones I would trust on this topic that now they said Iran is using Bitcoin. Now, I said, what does that mean? Like, actually to transact through the strait, or does that mean they're holding it? And obviously, there's not a ton of movement through the strait anyways. So has Bitcoin been used to get through the strait? Totally possible. That's what's being reported. Is Iran holding Bitcoin? Are these countries that have sanctions threatened or enforced on them, as the world becomes more bifurcated where no one trusts each other, are these other nation states, are they aware of Bitcoin? Are they mining Bitcoin? Are they holding Bitcoin? What's been communicated to me is an affirmative, like, absolutely yes. What's also been communicated to me is they're not using stablecoins. You'd have to be an idiot to use stablecoins. And you guys can put two and two together. Like, I co-founded a business with Tether, right? Like, they're not using stablecoins is what I'm being told. You'd have to be an idiot to use stablecoins. Stablecoins are just dressing on top of the dollar. Iran would have to be dumb to be using stablecoins. I've seen that reported. I've been told that's not the case. Again, take it for what it's worth. I have no idea. I'm not there, right? So how confidently can I speak? But what I did want to opine on is this. Bitcoin's better than gold. It's just better money than gold. That's a fact. Now, does that mean that Bitcoin should be worth more than gold today? Does that mean that the world should transition to a Bitcoin standard before a gold standard? Now, that is fairly debatable. Gold is big enough to absorb something like the sovereign debt markets, the like nation state sovereign debt markets, and transition to a standard where China doesn't have to trust the US that much. Bitcoin's not big enough. Like I said, I'm looking at the market cap I read you guys earlier, 1.49 trillion. Let's look up companies by market cap. Companies by market cap. So Bitcoin is currently smaller than Nvidia, smaller than Google, smaller than Apple, smaller than Microsoft, smaller than Amazon, smaller than TSMC, smaller than Broadcom, smaller than Saudi Aramco, smaller than Meta, that's where we stop. Bitcoin would be the 10th largest company by market cap, at least that is public and known. Tesla's market cap is 1.3 trillion and Bitcoin sitting at 1.49 trillion. So Bitcoin's just not big enough, guys. Like, could the world move on to a Meta Platforms Facebook standard? Of course not. That's outrageous. China's surplus is almost annually, a year, is almost the entire size of the Bitcoin market cap. And so what you have right now, where is Bitcoin in its adoption phase? You've got guys like Saylor that are buying like $1 billion a week. Bitcoin can absorb those flows, but if Bitcoin needed $1 trillion, like China needed $1 trillion worth of Bitcoin, I mean, the price would go to $10 million overnight. And so it's just not I think what we will live in is this kind of like dual era where the people will be adopting Bitcoin and sovereigns like China don't have a choice. They'll be adopting gold. Now, why is Bitcoin better than gold? Why is there no second best? Well, I've made this point before. I wanted to take time to make it on the show. Gold, Bitcoin is uniquely like the only asset I'm aware of that is both a monetary asset and a monetary network. It's both. What do I mean by that? Bitcoin lowercase Bitcoin, it's a physical commodity. It's a bearer instrument. The data itself acts like a physical token or coin. It is a fixed supply bearer money, physical. Satoshi's innovation is he turned data and text into a physical commodity. Bitcoin behaves like a bearer token. Bitcoin is also, capital B Bitcoin, a network, a monetary network. The Bitcoin network can achieve transaction finality between the sender and the receiver without anyone else involved. So I'll say it again. Bitcoin is both a monetary asset and a monetary network.
What makes this moment even more complex is that markets don't always react immediately to underlying stress, and history proves that. Mallers points back to the 1973 oil shock, where, despite a massive disruption, oil prices surging hundreds of %, it took nearly a full year for the stock market to truly price in the economic damage. At first, markets stayed resilient, optimistic, almost dismissive, and then, slowly, reality caught up, and that's the exact tension we're seeing today. On one hand, Bitcoin is pushing higher, risk assets are holding strong, and liquidity appears to be quietly entering the system. On the other hand, you have mounting signs of stress, credit markets tightening, withdrawal limits being imposed, and regulators scrambling for clarity. So which is it? Are markets anticipating a wave of liquidity that will push everything higher? Or are they simply too early to recognize the severity of what's building underneath? And that brings us directly into the core of his argument: liquidity, or more importantly, the lack of it.
I thought this tweet was also funny. Just a funny meme. Look, this is stay humble and stack sats. In 2010, it was 10,000 Bitcoin to get 2 pizzas. Today, it's 26 Bitcoin to get a super tanker of oil through the Strait of Hormuz. What a meme. This is why you stay humble and stack sats, ladies and gentlemen. Number go up, as they say. Okay, now let's get into some of the macro liquidity. This is where I think it's a little bit interesting. So the title of this chapter is "There Just Simply Isn't Enough Liquidity." And what's been going on despite the war, to me, is really interesting. Bessent, Powell, and banks have been having meetings and talking because there is a credit problem. There just isn't enough filthy fiat to go around in the filthy financial system to survive. So from Bloomberg, this Anthropic model scare sparks urgent Bessent Powell warning to bank CEOs. Okay, I found this interesting. To me, this headline did not pass my sniff test. I guess Anthropic has a model that can find every security vulnerability in every piece of software. I don't know. Yeah, I would want to meet with people about that, but I would want to meet with bank CEOs. My interpretation of this headline was Bessent and Powell need to talk to CEOs of banks because the financial system is on the cusp of what could be a serious crisis. And let's not title the meeting that. Let's title it that Anthropic's model was really powerful. I don't know. I wouldn't want to talk to the CEO of Bank of America if Anthropic had a cool AI model. I don't know about you guys. It just wouldn't be my first call. I would want to talk to a bunch of other people and tech folks and I just wouldn't what is the CEO of Citi going to tell me? Is that just me? I don't know. I mean, obviously you could talk to it. Just to me, this read as the Treasury Secretary, the chair of the Fed, and the CEO of all the banks spent some time and chatted about serious shit. Now, whether they talked about Anthropic a little bit, sure, whatever. I don't know, maybe. But did they talk about the private credit crisis that's brewing? Did they talk about the deflation that AI is bringing to the market? Did they talk about the fact that oil isn't going to come down anytime soon? Do you think that came up? What do you guys think? Do you think that came up? I do, right? Didn't pass my sniff test. So the Fed also, I saw this hit the Bloomberg terminal. Fed seeks details on U.S. banks' exposure to private credit firms. Okay, interesting. That wasn't the title of the meeting. The meeting was about AI for whatever reason. But now this is more than my expectation. The Federal Reserve is asking major U.S. banks for details about their exposure to private credit due to a surge in redemptions and a rise in troubled loans in the industry. Okay, the Fed's queries are intended to assess the level of stress in the private credit industry and the potential for it to spill over into the wider financial system. Okay. The Treasury Department is also questioning the insurance industry about exposures to private credit as part of a broader regulatory push to get a handle on the scale of the strains in the $1.8 trillion private credit industry. Okay. The Federal Reserve is asking major U.S. banks for details about their exposure to private credit following a surge in redemptions from the funds and a rise in troubled loans in the industry, according to people with knowledge of the matter. Okay. Interesting. Mind you, the Blue Owl, 22% withdrawal, like they are seemingly There was a new one, Carlyle. Carlyle hit the news wire. They have a $7 billion credit fund, and they've now received 16% withdrawal requests, and they're capping it at 5%. So here's my thing, guys. Office buildings, this also snuck through the headlines, because here's the thing. The Twitter algorithms are now dominated by whatever Trump's talking about. Did you guys catch this by the Wall Street Journal? A fire sale has U.S. office buildings going for 90% off. What do I think is going on in the financial markets? Why is Bitcoin going up? I don't know. I'm never going to sit here and pretend to you guys that I know the answers to everything. I'll always have opinions. You all should too. Highly encourage that. Have your own opinion. Stand on your own 10. But I don't know the answer here, to be honest. Interestingly, Arthur Hayes posted this. Powell and Besant provided the cancerous soft drink to go with the Trump taco. That's a hilarious tweet. But his US dollar liquidity index seems to be trending up. So they are injecting liquidity somehow, some way. And risk assets seem to be reacting to that. I don't know what goes into Arthur's US dollar liquidity index. It's unclear to me. But risk is performing well. It's not just Bitcoin. Is this a new trend? Are we back in a bull market? You know, Arthur seems to suggest that some liquidity is being injected into the system and Bitcoin is acting favorably to that. There are charts, though, that watching software bleed lower and Bitcoin try and bleed higher suggests that Bitcoin is just margin calling. You know, everyone was so short on it, thought it was going to zero, that shorts are getting liquidated, and then Bitcoin will head lower. I don't know. This is something that we will watch, and I'll bring up on next show, is just trying to figure out. You know, I still wouldn't put it past Bitcoin to have a giant whoosh down in some capitulation event, which will allow these financial authorities and central planners to print the money.
Here's the part most people misunderstand. Central banks don't step in before things break. They step in after. Money printing, liquidity injections, bailouts, those don't happen as preventative measures. They happen in response to crisis. Because politically, it's far easier to justify intervention when there's visible damage, when something has already failed, when markets are already in panic. And that's why this current environment is so uncertain, because we could go one of two ways. If liquidity continues to quietly build, if policymakers find a way to stabilize the system without a visible shock, then yes, Bitcoin could continue climbing. New highs could come faster than expected. A move towards six figures wouldn't be surprising in that scenario, but the other path is just as likely. If the private credit stress spills over, if markets finally begin to price in the impact of constrained liquidity, rising defaults, and broader economic pressure, then we could see a sharp, sudden move lower, the kind of move that forces intervention, the kind of move that gives central banks the justification to step in and flood the system with liquidity. And ironically, that's the moment that could set the stage for the next major Bitcoin rally, because at its core, this isn't just about price, it's about trust. Trust in financial systems, trust in currencies, and trust in the institutions managing both. That's why Mallers' strategy stays simple, even in uncertainty. Don't try to time every move, just stay consistent, accumulate, stay disciplined, and understand the bigger picture. If you made it this far, drop a comment below. Do you think Bitcoin hits new highs first, Or do we get that whoosh moment before the next leg up? Don't forget to like the video, subscribe if you haven't already, and I'll see you in the next one. Thanks for watching.